All right, let's take the discussion on the currency forward with another expert joining on the show, Abhishek Goenka from India Forex Advisors. Hi, Abhishek. Thanks for joining us on the show today. You must be listening into all the comments coming in from our experts earlier in the show, and we've already looked at how the rupee continues to remain on a weak footing. In such a scenario, what are you advising your clients at India Forex?
See, we released one report last year in August 2012 about rupee touching 60 in this year, and I think we are going towards that particular levels. And I think the major reason what we cited that time was two. One was, of course, we were seriously concerned about the increasing current account deficit, which we all are talking about, and of course, the US dollar ending its bear run of the last 10 years. So I think the next 2-3 years in the US dollar is going to be a significant bull run for the currency and for the economy overall, when all the major economies across the world are actually slowing down in terms of growth. And because of all this, we expect that a very, very strong dollar is likely to stay in the coming 2-3 years, and maybe the dollar index hits towards the 87, 88 levels maybe in December 2013 or before that. And probably that could be one more driver along with the local domestic factors which could actually take the rupee weaker. So 60 is no brainer. I think it's very much possible between today and December 2030. Anytime we could see those kind of levels coming in. And I guess what we are currently advising all our importer clients is to start covering their imports on any dip in the market, any 40-50 paisa or 1 rupee dip in the market, or any significant depreciation. They should cover their imports, and exporters should go and cover long term, where they're getting 60 plus levels on the forward markets. And any kind of an ECB or a foreign currency loan, one has to be extremely cautious, because if we're going to see a free fall in the rupee like this, then definitely those long-term ECBs or foreign currency loans will become a serious problem for the country and all the companies in India.
Abhishek, you're painting quite a dire scenario, 60 in the medium term. You must be looking at a lot of other macro data as well, while taking a call or devising strategies on the currency. How are you looking at the dollar-yen situation pan out? Because that also impacts a lot of corporates back here in India, and of course, trading at the in the currency market as well.
See, dollar yen, as we released one report last year of expecting the dollar yen to head towards 85. I think we're currently at 100 plus levels, close to that. So I think dollar yen, the way it has moved in the last few years from 120 to 76 levels, and then it was a band of 76 to 80 for a couple of years' time. And when this range broke out, and with the clear policy of printing more and more money in Japan, I think dollar yen is clearly on the upside, and we are going to see levels close to 110 maybe by next 3 to 4 months probably. So I think dollar yen is a clear buy. So by the time any dip you get in the market, one should definitely go and cover their exports, especially for people who are exporting. So I think they should definitely cover at 95, 96, 26 kind of a level if they get in the market. And importers are a little comfortable on that particular front. I don't think there's a concern here.
Abhishek, stay on with us. Vijay Bhamwani also joins us in our studios from BSPL India. Vijay, we were discussing about this yesterday, and today turned out to be pretty fast. The 57 level you're talking about was taken out. Probably lower levels coming shortly?
I think so, yes, Ajay. I have been maintaining that I am bullish on the USD INR. Strength in the INR, if any, was likely to be short-lived. The cause and effect theory tells you that the reason why the rupee is weakening, the causes which weaken the rupee have not been taken out yet. As long as the cause remains, the effect will also remain. So my guess is we are heading to a new high where the USD INR is concerned. And I'm not saying that it's going to happen tomorrow morning or day after tomorrow morning, but I'm betting that the USD INR will go past the 57.33 levels that you saw as the earlier high, and probably stay above that comfortably for a while to come. I think the dollar bulls, which I have been talking about being back in business, are really back in business, and how.
Abhishek, you've already told us your medium to long-term strategy, and what exactly are you advising your clients in terms of preparing for that kind of levels. But in the near term, what kind of levels for traders can you advise? As Vijay was suggesting going long on dollar INR, what's your strategy?
We are advising our clients who are having open import positions to cover at around 56, 30, 50 levels. Close to that levels, if you get a retracement, and if you're lucky enough, you should go and cover your imports or buy positions for trading purposes in case they want to trade. And overall, a deeper retracement is possible till 55, 60 levels. If you get something, you can increase your positions on a little larger extent and cover your positions accordingly.
All right, Abhishek. Thanks a lot for joining us on the show today. Vijay, of course, continues to discuss commodities and agri on the other side. We'll be taking a check on gold and crude. Gold prices have recovered after slipping in trade as ECB kept its key rates unchanged. All eyes are now on US jobs data. On the crude prices also continue to trade below the $104 per mark, and NYMEX crude rises after a big drop in US oil supplies.